Madam Chair, Mr. Chairman, Ranking Republican members, and members of the committee, I'm David Hoyt, Head of Wholesale Banking at Wells Fargo and Company. Thank you for the opportunity to be here today to discuss lending and credit, topics that are critical to business owners, our business at Wells Fargo, and the economic recovery. Wells Fargo is the #1 small business, middle market, and commercial real estate lender in America, serving more than 2 million small businesses and 15,000 middle market businesses nationwide. We bank approximately 1 out of every 10 small businesses and 1 out of every 3 middle market businesses in this country. In many cases, we have had banking relationships with customers that have spanned multiple economic cycles. We proactively work with borrowers that may be experiencing difficulties and encourage them to have conversations with us as early as possible so that we're able to explore alternatives. Many business owners in America are hurting. At Wells Fargo, we're doing our part to get businesses back on their feet. In 2009, we extended over $40 billion of new credit to our business borrowers. We continue to read media stories and hear directly from business customers who are concerned about being able to obtain the credit they need to run their businesses. We also see that the demand for business credit has remained soft through the fourth quarter of 2009. In our opinion, the reality of weaker loan demand, as well as the perception of the lack of availability of credit, is rooted in several factors. First, the economy has taken the toll on the credit and financial capacity of many businesses, reducing their cash flow and the capacity to repay debt. Second, asset values have declined from much higher levels which existed at the top of the economic cycle. Businesses that relied on the value of these assets to borrow can't borrow as much against them today. Third, given the uncertainty of the economic environment, we see our borrowers being more conservative, stocking less inventory, making few capital investments, which reduces the need to borrow. And finally, loan structures and terms are more conservative now than at the peak of the economic cycle, and we believe rightfully so. The increasingly aggressive extensions of business credit were partially responsible for the current financial crisis. Borrowers that access credit on those terms find the terms of credit extended today to be more restrictive. Turning to commercial real estate market, asset values have decreased significantly, leaving many borrowers and lenders in a position where loans exceed the value of the property securing them. During the last decade, commercial real estate saw a substantial amount of liquidity enter the market, reaching an all-time high in 2007. As a result, valuations increased. As the economy slowed, returns reverted to normal levels. Adding to the problem, weaker tenant demand and tenant failures are resulting in declines in cash flow generated by individual properties. The combination of these issues has resulted in declining property values, in many cases 40 to 45%. Our recent experience is that there is substantial liquidity available in the market to deal with these issues on a macro level, although these resolutions are often economically painful to individual owners and lenders. In our opinion, this is not a short-term problem, and our expectation is that it will take some time for the problem of the overvaluation of commercial real estate to work its way through the system. We want to be part of the solution. We're hiring bankers, providing educational tools to customers, doing outreach to women and diverse business owners, and extending SBA loans. When lending to small businesses, we're taking the time to reevaluate the loans we've declined. We take a second look at declined loans because we want to make every good loan we can. There are some positive signs in the market. While loan demand is soft, it has improved over the last several months. Businesses applying for credit are stronger. Competition for well underwritten loan opportunities has increased, and liquidities in the market have also improved. As we all travel along the road to economic recovery, Wells Fargo maintains our commitment to help business owners, large and small alike, succeed financially. Madam Chair, Mr. Chairman, and the members of the committee, thank you, and I would be happy to answer any questions.